G'day folks, welcome back to another update for natural gas. Now it's actually broken through the resistance recently and we're going to show you some trading opportunities with some back testing. Before we go any further, make sure you hit that like and subscribe to support the channel, and also reference the +1 videos where we do a deeper dive into some trading strategies for you to follow. In terms of the outlook, global natural gas markets in late 2025 are defined by moderate demand growth, about +1 to 1.3% year to date, surging LNG supply around +5.5% expected in 2025, offsetting reduced Russian pipeline flows. Europe's reliance on LNG to refill depleted storage keeps prices elevated, around 28 to 40% year on year. Geopolitical flare-ups, especially in the Middle East and around the Straits of Hormuz, have triggered rapid price spikes around 18 to 20%, highlighting ongoing energy security vulnerabilities tied to regional conflict and terrorism. So looking at the weekly chart first, we've got the price above the moving averages, and so is the CCI. So it's a bullish momentum, and that means if we're trading the daily time frame, we trade in the direction of the weekly, and that's what is happening at the moment. We're going bullish on the daily. Now the other thing we'll look for here is any divergence, and there's no divergence to be concerned about on the weekly. Next we scroll down to the daily chart, and the daily we had a resistance here previously, and I've moved that up to this new level as a resistance, and we're still bullish on the CCI and the price, and again there's no divergence to be concerned about, although just be careful of that resistance. We possibly might see a bit more of a pullback from where we are at the moment. And then next we go to so even if you're trading on the daily, we still want to look at the 1 hour chart. And on the 1 hour, if you're trading, we go in the direction of the daily, which means we take long trades only. Now at the moment, you'll notice here the CCI is dropping off, and so is the price off that resistance on the 1 hour time period. And as well, that's a result of this bearish divergence, lower highs on the CCI versus higher highs on the price, and it started to drop off. Now it actually hit our 23-38% target range, and for those new to the channel, that Fibonacci is measured taking it back to that low there before the divergence started. Now the reason I take it back to that level and not to this closer low there is because I'd like to see the price break significantly below the moving averages like it did back here. Whereas you can see here, even though the price retraced, the moving averages and the price was still pretty much in an uptrend. So here it was basically a significant low with the price breaking below the moving averages. And that's at 23-38% Fibonacci range. Now that's a minimum retrace we can expect more than 90% of the time, and sometimes it falls a lot further. In this case it hit it perfectly, the 23%, and it's bounced from there. But notice the CCI is still dropping, so I'd be very cautious about going long. I'd like to see it break through this resistance, but as well I'd like to see the CCI break higher as well. Now if we go to the back test, let me get rid of that Fibonacci for a moment. And what I've done here, according to the daily, remember if you're trading on the 1 hour time frame, we trade in the direction of the daily, and you would have been going long during this period here from that arrow there on around about the 3rd of September. And that's what I've done here with the back test, demonstrating how you would have gone long. Now again, going long according to the daily, but also on the hourly, this is the hourly chart, we do pay attention to any divergence. You can see here we had a bearish divergence during this little period versus higher highs versus lower highs on the CCI. So you would have gotten ready, and that's where you started seeing the moving averages starting to turn down during that little period. And the CCI was in a downswing as well, and that's where you would have got out of the trade, possibly with a couple of a small little profit made. Again, avoid going long when the hourly is in the price and the CCI are in a decline, and then started taking long trades during this little period when both the price and the CCI started moving up. You can see there a few little contracts entered and closed. Then again closing out any trades where the CCI started turning down. And now notice here we had a bullish divergence, higher lows versus lower lows on the price, and you would have been ideal to go long during that little period and let it run, and then paying attention to any divergence as well. You probably would have closed it out at that little point there. Now again, notice these drawdowns. Again, you would have avoided being in any long trades during these periods and avoiding those drawdowns. And again, another one here, you would have got out there at the very latest with that price turning down and the CCI turning down as well. Possibly with the contract open, take your stop out of that one, and stop loss I should say, and avoid that drawdown. So you would have got out during that little period and then going long again there, especially paying attention to this bullish divergence. Again, making some nice little gains there, and again closing it out when the price and the moving averages started to turn down there. At the moment, Similarly, you'd be going long during that little period, and at the moment, probably take out, close out your positions especially with the CCI declining. And again, even though the price is broken above, I'd like to see the CCI giving a more strong bullish move to the upside before taking any long trades. So here for BOIL, on the weekly, the price is below the moving average, although last couple of weeks it's made a bit of an upswing, nothing too dramatic though. But notice it's below the moving averages, and so is the CCI, which means we take short trades only if you're trading on the daily time frame. So the weekly's bearish. On the daily, however, we've actually pretty much consolidating, and I put some long positions here. Pretty much, you notice a consolidation as well. You've got this very constricted moving average range. That's a consolidation. What I'd like to see is the moving averages widen like they did here, going short, or back here going long. You'd see that little consolidation there, and then it starts to widen, giving us a more stronger momentum to the upside. At the moment, both the price and the CCI are bullish, so taking long trades. That's on the daily. So if you're trading on the 1 hour time period, going long only, and you would have been going, now what I've done here, I've started going long from this period on the back test to show you the what happens if you, throughout this seesawing event or this roller coaster event. But more recently, you would have been going long from that point when the price breaks above the moving average, and so is the CCI, and closing it out at that level there when the CCI touches the moving average band right near the top there. That would have been a nice little trade to take. And again, going long according to the daily, but avoid taking short trades. Now on the back test, again going long from around about the 29th of September here, going long during this little period and closing it out when the CCI touches that moving average range there. That gives you an early exit. That would have been near the top there on that red candle there, and that would have given you a nice little gain. Again, avoid trading long until we see the price and the CCI break up there, and then notice here you would have got out probably with a small gain right on that little candle there. The CCI touched that moving average range. Then avoid going long, avoid shorts as well, of course, and started going long from that period there. Now here I've run the back test throughout the whole period to show the effects of any drawdown. So obviously you want to close out your positions and take your profits, and avoid continuing going long during this little period. So don't be tempted. Use your stop losses in that area there. For KOLD on the weekly, first off, the price is just a fresh breakout to the downside on the price move, below the price moving averages, and the CCI is already in a downtrend, so bearish momentum at the moment for KOLD. Otherwise, you would have been going long during these weeks of an uptrend there. So at the moment, bearish, or very just, almost bearish. I'd like to see it break below a lot more. And as well, I'd like to see those moving averages starting to turn down like they did here, for example. That would have been ideal to go short during that period. So short positions only if you're trading on the daily. If you're trading on the 1 hour time period, you look at the daily. And what the daily is showing you as well is short positions. So you can see there from that arrow that would have taken some short positions, closing it out. If you're trading on the daily, when the price on the CCI breaks into that moving average range, that might have been a little loss there. Take your loss, don't get too greedy. Then going short again when both the price and the CCI break below. So you'd be going short at the moment on the daily. If you're trading the 1 hour time period, you're going short again according to the daily trend. And what the dailies and what the 1 hour time period here is showing, again going short when it breaks below the moving average of the price and the CCI. That would have been a nice little gain, and then closing it out when the CCI especially touches the moving average range, and it would have been probably one of those candles there on the 1 hour time period, and right near the bottom there. That gives you an earlier exit rather than waiting for the price to break into the moving averages. In terms of the back test, it started here from around about the 20th of October. Again, the 20th of October, that's according to the daily, which is this period here, going short during those little periods, what it looks like on the 1 hour time period. That's here. So again, taking a short entry, closing it out. At that point, would have had a nice little gain. Avoid going long or short during that period. That was a false break to the downside. Again, notice how the moving averages are still in an uptrend. The back test here, I'm looking at a break below the moving averages. The back test here is showing the price, the trade entered, even though the moving averages are still in an upswing, an up momentum. So again, if you're watching this manually, it's probably better to wait for the moving averages to start to bend down like they did here to take short entries. And that's probably where you would have gone short, ideally, around one of those candles there. So again, avoid going long or short, especially when you see the moving averages in an upswing. wait for the moving averages to start to bend down, like probably on that candle there, as I said. And you would have closed it out on one of those little candles there and maximize your returns. The UNG on the weekly, the price has already broken into that moving average range. We were short. Notice the CCI is broken above a very narrow moving average range. So bullish on the CCI, neutral on the price. I'd like to see that break higher than the moving averages to confirm. Otherwise, this could just be a little bit of a retrace and then before falling further. So just be aware of that. So neutral at the moment on the weekly if you're trading on the daily. On the daily, if you're trading on the 1 hour time period, that's already broken above the moving averages. You would have been going along from that candle on the 1 hour, according to this daily trend, and we'll go to the 1 hour in a second, but again going along according to the daily trend. And there was a bullish divergence back here versus lower lows on the price off that support, and it made a small bounce. You can see there I've drawn a 23-38% target range, and that would have been drawn back just to prove it that I was not misleading. Yet took it back to that high again. Remember, it broke above the moving averages. Here we're going short, and that's at 23-38% Fibonacci retrace. So that's the daily. Now going to the 1 hour time period. First of all, let's remind myself we're going along according to the daily. So in the 1 hour, you would have been going long during this period, and avoid going short at this point because the daily is in an upswing. So wait for that to both break above that resistance. Now that resistance should probably be moved. I'll move that to that level there. So again, I'd like to see both the price and the CCI break higher than the moving averages. But by that stage, we may see a break above this resistance as well. So on the 1 hour time period, avoid going long or short at the moment. If you go to the back test, starting back here from around about the 18th of October, and that's here on the, I'll show you the daily again, just to show it. Going long from that period there. On the back test, again going long, the price and the CCI break above the moving averages, and closing it out when that CCI touches the moving average range right on that candle there. Avoid trading long or short at this point until it breaks above there again. Again, I'm running the back test throughout the whole period. Ideally, you would have gone long during that period when it broke above the moving averages there, and also the moving average started having a bit of an upswing at that point there. If I get some share trading ideas, why not go to the Patreon website. Here we've got a portfolio. We've had some sold shares. We sold them since around about the 21st of September this year. So a bit over a month of trading. And we've generated about 9.67% of returns. So we do a bullish share scan each week end. So go to that Patreon link in the description below if you're interested in learning some bullish share trading ideas. Hit that like and subscribe button. Thanks for watching, and see you in our next update.